Ladies and gentlemen, today is January 1st, 2026. What I'm about to share with you is not opinion, not speculation, and not secondhand information. This is the result of an intensive hours-long investigation into the silver market. And what I uncovered is the most critical confirmation we have seen all year. The Chinese silver export ban is not a rumor. It is not theoretical. It is active, it is enforced, and it is happening right now. For the past 3 months, market participants have been tracking China's announcement that new export licensing requirements for refined silver would take effect on January 1st, 2026. The policy looked aggressive on paper, but many believed it would never be enforced in practice. Those assumptions were wrong. The new requirements are severe by design. To qualify for an export license, a silver refiner must produce at least 80 metric tons of refined silver annually and maintain a minimum of $30 million in established credit lines. These thresholds were engineered to exclude the majority of Chinese refiners and consolidate export control into the hands of a very small group of state-approved entities. Even for those that meet these requirements, the license does not grant automatic export permission. Every individual shipment must be approved separately by the government. Each shipment is reviewed, approved, delayed, or denied on a case-by-case basis. Until the policy officially went live, there was doubt. Skeptics claimed this was posturing. Analysts suggested there would be grace periods, exemptions, or loopholes for existing contracts. Others argued enforcement would be symbolic rather than real. Today, those narratives collapsed. Immediately after the policy took effect, I began directly contacting Chinese silver refiners and trading houses. Not a handful, not a small sample. I contacted 30 separate entities across multiple provinces, representing a broad cross-section of the industry. Large state-owned refiners, medium-sized private companies, small regional processors, coastal exporters, and inland refiners. The goal was simple: determine whether enforcement was selective or universal, symbolic or absolute. The results were unambiguous. Out of 30 refiners contacted, 28 stated clearly and directly that they cannot export refined silver to Western buyers. That is a 93% denial rate. Of the remaining 2, one explained that exports are theoretically possible, but require individual government approval for each shipment, a process that takes a minimum of 4 to 6 weeks with no guarantee of success. The others stated they are awaiting further clarification from the Ministry of Commerce and are not accepting any export orders until official guidance is received. In practical terms, the denial rate is effectively 100%. Not a single refiner contacted is currently exporting or willing to commit to exporting refined silver to Western buyers. This is not rumor. This is not interpretation. This is direct confirmation obtained by contacting refiners and asking a straightforward commercial question. Can you export refined silver to buyers in the United States, Europe, or Japan in January or February 2026? The answer, overwhelmingly, is no. To ensure transparency, let me explain the methodology. I used a database of Chinese silver refiners compiled over the past 6 months, sourced from industry directories, trade publications, company websites, and direct industry contacts. From this database, 30 refiners were selected based on 3 criteria: geographic diversity, size diversity, and product focus. The refiners contacted were located across Guangdong, Jiangxi, Hunan, Yunnan, Shanxi, Henan, and Jiangsu provinces. 11 were large operations with annual capacity above 200 tons. 13 were medium-sized operations producing between 50 and 200 tons. 6 were smaller regional processors with capacity below 50 tons. In each call, I identified myself as representing a US-based industrial buyer seeking refined silver for manufacturing use. I asked whether the refiner could fulfill an export order to the United States with delivery in January or February 2026. I asked about quantities, pricing, and timelines. I did not ask about the export ban directly. I simply asked whether they could do business. All 30 calls were completed. No one refused to speak. No one was evasive. Most were professional and apologetic. But the answers fell into 3 clear categories. The first category was disqualification from export licensing. 18 refiners explained that they do not meet the new licensing requirements. Most cited production below the 80 metric ton threshold, insufficient credit lines below $30 million, or both. These refiners were explicit. They referenced official Ministry of Commerce rules effective January 1st, 2026, and stated they are legally prohibited from exporting refined silver. One medium-sized refiner in Hunan province explained that their annual production is 62 tons below the required minimum. A smaller facility in Jiangxi stated their credit line is $12 million far below the $30 million requirement, and that their license application was denied. Even a large refiner in Guangdong producing over 100 tons annually was disqualified due to financial structure issues related to credit requirements. What stood out was consistency. The language, the thresholds, and the dates were identical across conversations. This was not confusion. This was enforcement. The second category involved refiners who technically qualify for licenses but face shipment-by-shipment government approval. 8 large refiners explained that although they meet production and credit thresholds, every export shipment must be individually approved. Each request requires buyer details, destination, quantity, intended use, and delivery timeline. Approval takes 4 to 6 weeks at minimum and can be denied without explanation. Several refiners stated plainly that domestic demand is prioritized and that foreign buyers are at the bottom of the list. One estimated less than a 20% probability of approval for Western buyers, even after waiting 6 to 8 weeks. This is not a functioning supply chain. It is a controlled bottleneck. The third category revealed consistent government messaging. Across the 28 denials, refiners repeatedly referenced government policy, effective January 1st, 2026, export controls from the Ministry of Commerce, and legal prohibitions. Many stated explicitly that refined silver is now considered a strategic material prioritized for Chinese industry, including solar, electric vehicles, electronics, and defense. Several refiners stated they had received official notifications from provincial commerce bureaus warning that violations would result in permanent license loss and penalties. Compliance was described as mandatory, not optional. After completing these calls, I contacted 5 Western industrial buyers with a history of sourcing silver from China. These included companies in electronics, solar panels, automotive components, medical devices, and specialty chemicals. 3 confirmed they have already received denial notices from Chinese suppliers citing the January 1st export licensing requirements. 1 electronics manufacturer lost a quarterly order of 180,000 ounces. A solar panel producer lost a long-standing annual contract for 2.4 million ounces and now faces production cuts of 60% to 70% after inventory runs out. An automotive supplier had a 450,000-ounce shipment denied without explanation despite the refiner holding a license. These are not theoretical disruptions. They are happening now. At the same time, the physical silver market is reacting. 6 major U.S. bullion dealers confirmed they are raising prices aggressively due to the export ban. Replacement costs are rising by 30% to 40%. Prices for American silver eagles are moving from the 108 to 112 range into the 115 to 128 range. Dealers are acting defensively to avoid selling inventory that cannot be replaced. This has created a clear bifurcation between the physical and paper markets. While the paper spot price closed around $77.20, physical silver is already trading above $120. The physical market never closed for the holiday, and it has repriced based on real supply conditions. The implications are enormous. China controls approximately 60% to 70% of global silver refining capacity, processing 600 to 700 million ounces annually. An estimated 350 to 400 million ounces were previously exported to Western buyers. As of January 1st, 2026, that flow has effectively stopped. Western buyers cannot replace that volume quickly, if at all. Available uncontracted mine production, COMEX registered inventory of approximately 42 million ounces, limited London availability, and depleted dealer inventories together fall short by 70 to 120 million ounces annually. That shortfall hits immediately. Demand destruction is unlikely. New supply cannot be created quickly. The only mechanism left is price. When COMEX reopens, institutional buyers will confront this reality. I expect a gap higher, potentially opening between $85 and $92, followed by continued upward pressure. By the end of January, a trading range of $110 to $130 aligns with where the physical market is already pricing silver. This convergence will confirm what physical holders already understand. Premiums were not premiums. They were the real price. The paper price was the distortion. To summarize the findings, 30 Chinese refiners contacted, 28 cannot export. Export licenses are disqualifying most refiners and obstructing the rest. Western buyers are losing contracts. Dealers are repricing aggressively. Roughly 400 million ounces per year have been removed from the global supply chain. The export ban is real. It is enforced. It began on January 1st, 2026, and the silver market has permanently changed.
Hello friends, welcome back to today my new video and happy new year. 2026 is first day, 1st January. So friends, ladies, gentlemen, today is January 1st, 2026. What I am about to share with you is not opinion, not speculation, and not second hand information. This is the result of an 6 hours long investigation into the silver market, and what uncovered is the most critical confrontation we have seen all year. The Chinese silver export ban is not a rumor, it is not theoretical, it is active, it is enforced in, and it is happening right now. For the part 3 months market, participants have been tracking China's announcement the new export listing requirement for refined silver will take effort now. Refined silver will take effort now. January 1st, 2016, 2026. The policy looked aggressive on paper, but many believe it would never be enforced. Practical tools announcement room. The new the new requirements are several be designed. So friend, this is very informative video, so please this video share, more share, and thank you so much.